Good morning. As you could see this morning, we have Wells Fargo. They have reported earnings. They were in line this morning at $1.03 a share. Nothing new. In fact, when you look at their earnings performance, Wells Fargo consistently has met earnings typically over the last several quarters. In fact, they have met or beat earnings in every quarter going back to the third quarter of 2011. And so they have been a very, very solid earnings performer in the last 4 years. And Wells Fargo, due to the fact that they were less affected by the financial crisis, really trade on a different set of metrics than the other big banks. For example, I'll just show you real quickly their price to book ratio. If you look at Citibank or not JP Morgan, but if you look at Citibank or Bank of America, they typically trade at under 1 price to book ratio, which means that the company's book value is actually higher than what it trades for. And that's not very typical in the stock market. But for Wells Fargo, they have clearly been over 1.5 price to book ratio over the past year. Truly a consistent performer when it comes to the stock. I mean, the stock price over the last 12 months, it's up 10.5% year over year. However, as you can see by this chart, clearly it has had a healthy upward trend. And, looking forward over the next 12 months, their forward earnings, and keep in mind this is a next 12-month number right here, it's fairly consistent. Not huge growth, but they'll go from $4.26 a share, which is their next 12 months on the calendar, to the middle of 2017 to the middle of 2018, $4.90 a share. So it's somewhat healthy. Again, I mentioned this in a previous video, and I don't want to get too caught up on it, but I am of the opinion that larger banks are going to trade within a low forward PE multiple from here on out. Wells Fargo actually trading above 12 price to forward earnings. Again, another rarity. And so really, for me, Wells Fargo would be a solid hold if people have faith in the forward earnings. And in fact, let's take a look real quick at our forward earnings chart. I'm going to zoom in on this. And this chart I want it to assume a forward multiple of, we'll stay with 12.75 to be conservative. And so, yeah, it's not much in terms of price appreciation on a 12.75 price to forward earnings multiple. Let me back it up here a little bit and look at doing 13, and again, not much there. So, I mean, if you rely just on Wells Fargo's earnings over the next couple of years, I think this stock may have had its legs. That should change, but I think the stock may have really run its course. Now, again, we don't know the interest rate environment and how that's going to look over the next few years and whether that's going to really positively impact this stock or not. Something else that's atypical from a big bank standpoint is the dividends. This is a pretty solid dividend yield for a large bank at 2.6%. And, the dividends over just the last 4 years going from 7 cents a share to 38 cents a share. That's a pretty good dividend growth. And I believe, I'm wondering, and Wells Fargo will probably be the stock that tells us this, if big banks are going to turn more into utilities over the next 5 to 10 years due to just the amount of regulation that they're under. And this excessive amount of regulation really constrains a bank's ability to grow. Basel III capital requirements being an example. And so this is where I'll be looking, and I'll be looking for Wells Fargo to see if they become more like the AT&Ts of the world several years down the road. And in that case, from a more conservative standpoint, they'd be great. I'm not adverse to Wells Fargo stock right now, but I'm having a tough time seeing how it gets past the $60 a share mark, especially in light of the weaker than expected revenue number this morning. I hope you enjoyed the presentation. I hope you come back. Thank you, and have a great day.